Hey guys, welcome back to the channel. Always like to do something in those awkward first few seconds of a live stream. But I am back, folks, to drinking beer and asking or answering questions about finance, stocks, and investing. As you know, my channel tends to focus on technology, but I do, in my professional practice, focus on financial planning. Technology is just a interest of mine. Happy to start off with any comments or questions that you guys have. Let's talk about the live stream that I did earlier today, where we talked about the FOMC, the Federal Open Markets Committee, and kind of what their decision was going to be. What I predicted happening pretty much happened exactly, but I don't think that was a surprise. I think that was what a lot of people were thinking. So I'm happy to answer questions and happy to talk about what's going on in the stock market. And happy to say that my prediction of a relief rally coming right after the press conference, that didn't necessarily come true. I do think, though, by the end of the week, markets will probably be green. I think that tomorrow morning, we're going to see a lot of buying. Okay. We're going to see a lot of people getting back into the market. We saw some capitulation on Monday, but we see especially a lot of professionals who are just waiting to see what the Federal Reserve had to say. So, Bram Mormon says, where does one learn about after hours trading? Are you looking to participate in after hours trading, or do you just want to know what's going on in after hours trading? So, let me see here. S2002 says, what do you think about AMC squeezing anytime soon? That's not really a story that I covered first time around, other than from a kind of like a sociological perspective, and it's not one that I'm covering now. This is a company that's on its last leg, and it basically has no future. The stock price is only being propped up by manipulation from retail investors right now. They can't. Even prior to the pandemic, this was a company that was on its way out because people simply don't like to go to the movie theaters as much as they used to. So, I'm happy to talk about AMC from that perspective. But look, as far as short squeezes going on in terms of market manipulation, that's not something that I'm interested in talking in. So, Steven says, "Hi Jason, how are you? Can you please let us know how much further growth stocks will fall? Why is NEO shorted so heavily now? And do you think it can recover long term?" So first of all, I've been talking about NEO and Xpeng since the very beginning. Initially, I was extremely, and I'm talking about November. I'm talking, I think it was December of 2019 is when I bought my NEO stock. And then again, when they almost went out of business, when they got done, I bought a bunch of $119 a share. So my position as far as where I am in NEO is I'm still up, right? But I do think they're a great car designer, and I think they're doing a great job with that. I think they have some challenges, but can they go higher than they are now? I think they can definitely go higher than they are now, but I don't necessarily think that they're undervalued at the price they are now, right? It's hard to talk about valuation for companies that aren't profitable because what you're really looking at is valuing what you think their future cash flows are going to be. And in the hyper competitive and super fractured electric vehicle market that is China, I think that some of the optimism for NEO is misplaced, and some of the understanding about what government backing means is misplaced. Every Chinese company that is manufacturing cars is backed by the government. They have to go through this long and rigorous process to get a manufacturing license to do that. And so they all have sort of this quasi relationship with the government. I've always been more in favor of and more enthusiastic about Xpeng. And there's a couple of reasons why I could be wrong on that. And I've discussed, I don't understand the power of branding. I do know that NEO is far better at creating that brand experience than Xpeng is. But Xpeng is much further along in terms of their manufacturing capabilities. And they seem to have grabbed a niche of really young tech savvy professionals, which is a really wide market, right? NEO is focused on a narrower slice of the population. But here's the thing that a lot of people don't realize is that almost no company in China holds more than 10% of the market. There's over 130 different auto brands in China, but Chinese auto brands in China, including, and I don't know how many foreign brands that are sold there. The company that still has the most market share is actually VW. but no one talks about VW dominating China because they only have 14% of market share. Okay. So what would NEO need to do to grow into their valuation, right? They have to have a healthy domestic market, just like Xpeng does. They need to capture somewhere around 10% of that to grow into the valuation they have now. And they need to have a healthy export market. So that's a very tall order for them, right? Real growth into that market cap is years and years and years down the road. So I'm in this for the long haul. I had to reduce my holdings a little bit last year in December, at the end of December, just because NEO had become more than 10% of my overall net worth. But it doesn't mean I've given up on the company. I'm not selling anything. I haven't added anything in the last year, so I'm not happy about losing more than 50% of the high point, but I'm still way above my entry price in there. So I definitely still think that NEO has a good future. I think that enthusiasm waxes and wanes for these companies, and the future of their stock price is going to be based more on fundamentals from now on. So they need to find a pathway to profitability. Xpeng needs to find a pathway to profitability, or at least demonstrate that profitability is because they keep expanding and scaling production. And that's kind of the issue with NEO, is they don't own any of their production process. So they are really hamstrung by their relationship with JAC Motors, and they're a third-rate manufacturer, just like Xpeng's initial partner Hyma Motors they're a third-rate manufacturer as well. So, but the other part of your question is how much further will growth stocks fall? So I covered this in the live stream this morning, and I talked about a little bit about this in my Patreon only meeting that I had last Monday, where we're back through kind of the history since World War II. The market has been down like it was on Monday at its lowest, like down like 1,000 points, not 1,000 points, but in terms of magnitude, like 4%. It's done that, maybe 80, 90 times in history. And I'll look back all the 10% corrections that have happened in the market. 85% of the time, the market didn't really get worse from that point. So if you are betting on the side of the market's going to get worse anytime soon, you would have to have a compelling reason to believe that this is different than all of the other 85% of the time when the market did that. So company fundamentals actually look pretty good, lackluster, but actually pretty good. Consumer demand is really high for large items like homes, cars, that sort of thing. Household incomes look really good. Household saving rates look really good. Consumer demand has pinched down a little bit. I think that's really more fear than anything else. And it's going to come roaring back. There's going to be a post-Omicron boom that I think that all of us are going to be surprised by. So I think that's really I think that whether or not stocks even decline like another 10%, I think by the end of next year, or by the end of this year, that's really going to be kind of immaterial. We're going to see a pretty large economic expansion here. So, Bram Mower says, what's going on? Because it was crazy during the Tesla call. You're talking about after I was trading for Tesla, Bram. Okay. So basically you could look at what's going on after hours and all that. I don't know if you wanted to trade or anything, but after hours trading it's something that I used to do when I worked for a company called Momentum Securities in Houston a long, long, long time ago. And then I just kind of stopped doing, because in the long run, it doesn't really matter. You're disposing of something that you're going to make pennies on or lose pennies on because you think there's news coming down the road. But I can tell you what the volatility was caused by. And this is really something that's kind of unbelievable because of how spoiled investors are in this market, and Tesla investors are in general. But Tesla beat expectations, but it didn't hit like the $3 number, which I thought was kind of unrealistic. But it beat expectations by, I don't know, 13, 15 cents. I didn't really look at it too closely. And the guidance they gave was for more than 50% growth in manufacturing. If you're going to have a business that's going to grow by 50% or more, and they're beating guidance estimates, that's pretty good. Like, I don't know what else people expect. Maybe they expected a little bit firmer announcements as far as when the Cybertruck is going to ship, but they're going to ramp production of the Model Y at the Austin factory before Cybertruck ships. But I didn't actually get to finish the call because I had to run out and pick up my kids. But yeah, hold on a second here. S2002 says, thanks for your insight. Okay, guys, just want to remind you the super chat features are on. Definitely more likely to notice your question if you drop a little super chat in there, but I'm going to try and answer everyone's questions. I won't answer all comments, especially rude ones. So there we go. Hi, Jason. What is your number one stock holding over a 5-year time period if you're only allowed to pick one? Honestly, the 5-year time period is a little short for me. When I say I hold long term, I hold long term. But I'm gonna have to go out on a limb here and say that that right now the news is kind of bad for this company, and justifiably so. So Nvidia may be starting to walk away from the ARM acquisition, and I think that Nvidia actually is going to be one of it might be the number one performing stock over this next decade. When you look at put aside ARK Invest's recent performance and look at their underlying investment thesis, which is investing in disruptive innovation, and think about all of the technological revolution. Think about what life was like 10 years ago, and how much things have changed technologically since then. And I can guarantee you that in the next 10 years, that pace of change is only going to accelerate, and it's going to leave a lot of people and companies in the dust. Nvidia is way ahead in all 5 platforms that ARK has out there for disruptive technology. They are elbow deep in those platforms in terms of serving up software or hardware for those companies that are going to be involved in that. And I'm talking Metaverse, I'm talking Genomics, I'm talking AI, self-driving, everything that's out there. Next generation internet, even 5G. They are deep into 5G, and a lot of people don't understand that, right? So. And there's also a number of other things that they're elbow deep in that aren't necessarily publicized. They have their fingers in all kinds of things in the medical industry that you may not have heard about, and they have a number of different software projects that they're working on too. So, which I just heard about this today from a friend of mine who's working in this industry. So I need to go talk to him again and figure out what's going on. But anyway, Nvidia would probably be my number one pick over the next 10-year period, over the next 5-year period. That's a tough one, man. That's really kind of a tie between Tesla and Nvidia, I think so. But yeah, Nvidia, I never would have thought that I would choose a company quite so large to be one of the best performing stocks. Now, outside of some small caps right now that no one knows who they are right now, they're going to see, a 5,000, 10,000% return, because there's going to be something in that 10-year period that no one can predict and no one knows about. Outside of that, I'm going to say that Nvidia is probably that number one stock out there. So, Chris P. Taco says, I'm scared. How long is your time horizon? If you need the money next week, might be good reason to get scared. If you have a lot of money on margin and you're afraid of a margin call, then you might have a good reason to be scared. If you're 35 years old and you're not really looking to spend this money anytime soon, and you're not close to retirement, why are you scared? The average time it takes to turn around from a 10% correction where you're back to parity, like you have $1 million in the stock market, the market goes down, by 10%, you lose, or 15%, and you lose, $150,000. You're at $850,000 now, where you were at $1 million. On average, it takes you 116 days to get back to parity. Right. So I think that's illustrated right there of kind of what's going on now. Even in the event that we actually go through a recession, parity from beginning of the recession to recovery is usually only 19 months. Now, I don't know what tax bracket you're in. I don't know what your tax consequences would be to sell, but trying to sell right now and jump back in and make up that 15 to 40% gain, or the taxes you have to pay on gains, depending if they're long term or short term, and what tax bracket you're in, all that stuff. It may be tough to do. And when you buy back in, if you miss part of that run up, you're going to have fewer shares because you're using a large amount of money to buy back your original position. Buying and holding is a really good strategy. If you're feeling really bearish, sell some covered calls way out of the money on the stock that you have now and generate a little bit of income. Pay down some of that money that you have on margin, or just use that the money that you generated by selling some of those covered calls to buy some stocks that are on sale. In fact, that's what I did with Block stock on Thursday. is that I made some money selling some way out of the money covered calls, and I use that to purchase block. It wasn't a ton, but it's a few shares that I got at $120, and I got another one on Monday at like 104. And I'm talking one or two shares at a time of things, but you do what you can do. It's dollar cost averaging over time, and 10 years from now, that's going to look like a good investment. Okay. How does shorting something cause selling pressure? Well, you're borrowing shares that you don't have and selling them at a lower price in hopes that the price falls, right? So that causes people to start selling at lower and lower prices. The problem is once you load too many sellers short and the stock becomes oversold, then we have something like a short squeeze like we had last year with AMC and with what is it called? With GameStop, which was highly entertaining, by the way. It's sad for me to say this, but I actually enjoyed whatever the name of the hedge fund company was that got crushed. I actually enjoyed it. I know that's kind of cruel to say, but know that in order to invest in a hedge fund, you have to be a qualified investor. It means you have exclusive of your home a net worth of greater than $1 million or income of greater than $250,000 a year. So that's what you have to have in order to invest with one of these hedge funds. So these guys aren't hurting for money because they lost their money in that, and they took a lot of risks. All right. So let me see here. Steve-O says, "Hi Jason, where do you see PayPal, Square, and SoFi by the end of Q1, factoring in anticipated interest rate hike?" First of all, I wanted to say thank you to Chris P. Tacos for the $10 super chat or super sticker. I'm not sure which one you used, but I wanted to say thank you very much. I always appreciate those. And remember, folks, those are on. So, all right. Hi, Jason. How do you see PayPal, Square, SoFi, now block SoFi by the end of Q1, factoring in anticipated interest rate hike? Honestly, I don't expect to see a ton of improvement. I am going to be adding – I already own 100 shares of PayPal. So I'm looking to add in some Square, and I'm not going to add any more SoFi because at this point I have over 6,000 shares. But I am looking for other things in that financial sector. I'm actually looking at some traditional banks as well, including Goldman Sachs, which handed in some less than spectacular numbers. Look, they make most of their money through investment banking. They miss out on because they do traditional underwriting for IPOs and traditional underwriting for bond issues. Bond issues have dried up for a lot of folks. The bond issue market for like new issues has been dried up for a decade now. There just aren't as many as there used to be. And the spreads and how much money investment banks can make on that has been a lot less, right? Meaning when you go to Goldman Sachs and you ask them to create an investment consortium of a bunch of different investment bankers to back your bond issue, you're issuing a 10-year bond at 2.76%, and that was better than the 10-year Treasury. But the spread on that, between what the investment company has to pay the company issuing the bonds and what they're going to turn around and sell it for on the open market, they're making very little at this point, like 30 basis points, 75 basis points. Those spreads are going to get larger and larger and larger on fixed income. This is one of the things that people don't realize about financials. It's a really good time right now, not necessarily for looking at the Squares and the SoFis and the PayPals, but at investment banks, looking at Morgan Stanley, looking at Goldman Sachs, looking at TD Ameritrade. Not so much TD Ameritrade, but Morgan Stanley and Goldman Sachs and Merrill Lynch are looking really good right now. But even with banks, you're going to see it's going to be an initial 3 quarters probably that earnings look a little bit lackluster until you start to see spreads from their lending operations start to look better and better and better, right? Especially now that banks are going no fees, they have to make more money on their spreads. The other thing you're going to see is probably reduction in collateralized debt obligations, like a reduction in mortgage-backed securities, because they're going to be willing to, as long as interest that they're getting on the loan is higher than inflation, which it has not been for almost 20 years, then they're going to be more apt to keep that risk on their balance sheet, not pack it up into mortgage-backed securities and try to get rid of it on the open market. This is a positive thing. This is a very, very positive thing for banks to do that. So Yeah, so that's one of the things I'm very excited about. Let me see here. What do you think about small cap biotech in 2022? Man, I think that small cap biotech in 2022 is going to have a tough time. And part of that, excuse me, guys, part of that is the flight to quality that's going on right now. Money is being sucked out of that quarter, that sector rather, and it's going to quality stocks, blue chip stocks, that sort of thing. It's sitting on the sidelines, and people are becoming a little bit more risk adverse, and they're happier with larger companies. I also think that in the case that stock prices become depressed, I think that some of the larger biotech companies are going to go on an acquisition spree. It's been a while since that has happened, and it seems like the industry is due for that. Min Tran, super sticker $5. I wanted to thank you very much. You are one of the earliest listeners to my live stream, and you always contribute. Thank you so much. Sup, bro, from Japan. こんにちは。私の家内日本人です。でもちょっと日本語を話します。So anyway, guys, I don't know who that is. Actually, that could even be one of my kids. I don't know. Because I can't read Japanese. I can only speak a little bit of it. Hiker Dave says, any thoughts on the likelihood of a Polestar run up? So I haven't. When are they planning to go public? Is that anytime soon? Because if it's anytime soon, I don't necessarily have a lot of hope for that. So I do think that it's an interesting proposition, that Polestar is an interesting proposition. Polestar is actually owned by Volvo, which is owned by Geely, which is a Chinese automaker. Geely has their own electric vehicle platform called the C platform, SEA, where basically they're selling the skateboard platform, which is the battery and the drivetrain, to other manufacturers, trying to get them to adopt this. They think they want to be sort of an open source vehicle producer, where they produce that battery train, or that battery and that powertrain. You provide the software overlay and the superstructure of the vehicle, which honestly, I think there could be a future for that. I think there could be a future for small run custom electric vehicles, like there never really has been in internal combustion engines, where the difference is really appearance, and because the underlying technology platform is going to be relatively the same. So I do think there could possibly be a future for that. This sort of modular vehicle that you can literally order parts from here and there. So very interesting. So Divesh Patel says, any thoughts on AMD? Yeah, so I would be buying almost every chip maker at this point. Now, they're going to be, so one of the things that was surprising is that, yeah, back when the pandemic happened, they shut down a lot of production lines. And you can't bring these back just instantly. It takes a while to ramp up production again, right? But the real issue with chip production right now is the fact that we're using and demanding about 20% more chips than we did prior to the pandemic, because we're just using a bunch more crap that requires chips. You can't simply blame it on the auto industry. You can't simply blame it on EVs or anything. It's everything that we use. So worldwide demand has increased by 20%. It may actually be higher than that. We just can't satisfy demand now. So I think that all of these companies are going to be pouring money in the next couple of years into chip production. I think that their profits are going to be impacted over the next 2 or 3 quarters. I think you're going to have a lot of opportunity where they don't necessarily look so good and their price declines over the next few quarters, because it takes years to build a plant, and then we'll start seeing those profits later on down the road. So I wouldn't say you have to invest in AMD immediately. I think they may struggle this year, but I think that I think that the future looks very, very good for AMD. I think the future looks good for almost any chip maker at this point. I would love to see a sort of strategic reserve like oil, but a strategic reserve of semiconductor chips at this point. Number one, I would like us to be a little more proactive as a country to mess with the market in that case as well. We don't really do that with oil because of political reasons. but anyone can manufacture chips. It's not a natural resource that sits places, and we could use that to influence the market anytime we wanted to. So I think that we should be producing, semiconductor chips locally. So let me see here. Shoeless Joe says, I hear that EV tolls can be reasonably priced per mile, would unclog congested cities and less environmental impacts of maintaining roads. No, there aren't any right now. So I'm becoming a little bit more convinced this is going to happen. I think I've told you guys that I don't really like the idea of electric vehicles, takeoff, vertical takeoff and landing, because of the amount of air they move, and there's just not a way to do that without a tremendous amount of noise. And I would object if my neighbor decided to take off to work at 6:30 in the morning. He's got an electric car now. He's got a Tesla. I would object if my neighbor decided to take off on his basically his helicopter basically every morning at 5 o'clock in the morning like he does. That would wake me up, and he and I would have problems. And I think a lot of people would have problems that way. So, but I do think there's probably a larger market there, especially one that can drive as well as fly. There may be a larger market there. As far as unclogging roadways, as far as relieving congestion, I'm not sure that would happen. But yeah, I'm a little bit more interested in these than I was before. So, yep. Here we go. Here, let me thank a few more people. I want to thank Divesh Patel for giving me the super sticker. Thank you so much. Bram Morman, thank you so much, buddy. You've been a long time listener as well. It says for answering earlier questions. And Christian Thompson, thank you so much. I'm really enjoying doing these live streams again. I started off these live streams being super nervous and super awkward and weird on air, and not looking forward to them. And now I'm super awkward and weird on air, and I'm actually looking forward to doing them now. So it's a lot of fun. Yep. So Christian Thompson says, I'm super excited for the volatility. I am too, in a way, because that provides a lot of opportunity. I would like a lot of the cash or the cash secured or margin secured puts that I have to actually trigger and go through, so I can own stocks at the prices where I sold the puts. However, I don't want all of them to go through, because that would actually, put me, I'd have some margin debt at that point. So I definitely don't want to do that. But I do like some degree of volatility in the market. It is extremely profitable in the long run. So, yep. Bram Morman says, I'm a pilot. I think VTOLs are a bad idea. I wasn't even going to get into that, Bram, where there's a lot of people that I barely trust to drive. Look, think about how dumb the average person is on the road. And you have to remember that half of all people are below average. And right now, you basically can't prevent those people from getting a driver's license. How are we going to prevent them from getting a pilot's license? Because that's what you're going to need to fly one of those vehicles. And I think that even in the event that software and AI makes it so easy to fly those, any idiot can do it. I don't want any idiot doing it. All right, so it's just as deadly as a car, probably less deadly than a full-size airplane or something like that. But yeah, I agree with you. This is not a world that I'm looking forward to right now. And if there's going to be limitations on that, how great can that market really be in the future? So, Hiker Dave, so much. Thank you so much. For the super sticker. Shoeless Joe, 3 pounds sterling. Thank you so much. And I realize I don't know what time it is for you over there, because I haven't paid attention to that. I think something in the oven is going off. And let me I set it on timer. We'll be fine. So yeah. So here, Epic Cancer says, I know we both like Xpeng more, but Neo hit 20 or so. It's very tempting. It is tempting. And if you don't have Neo, I think that the price right now, what did it close at? 24 today, 25 today? I think that the price today could be pretty compelling. And so I think that getting in at 20, if you have that for the next 5 years, you aren't going to regret it. If you buy at 20, 24 today, whatever it is, and it goes down to 16 in the next 6 months, which it could, I don't know. But I think that long term, it's going to be a performer. I mean, if we get 10% per year performance out of this stock and it doubles in 7.2 years, I won't be surprised. And I mean, it's going to do, I think it's going to do better than that. But if it does that and it's in line with expectations of what I expect from most growth stocks, then I would be perfectly happy with that. Yeah. The volatility is going to sell premium when selling those options, especially the covered calls. Absolutely, it is. Absolutely, it is. It's actually gotten more. Well, I mean, the way out of the money calls that I like to sell. Like I sold a call like last week on Tesla stock for $1,300. So far out of the money that if the stock went up that much in a week, I'd probably have to sell the stock. But I think I made like $152 or something on that. So far out of the money. But now those premiums for stocks that are way out of the money because of all this volatility, they're getting higher and higher and higher at this point. And so I'm actually pretty happy with that too. It's bringing in more income. I'm using that to buy more stock at a depressed price. And that is one of the things you can do when the market is down is take a look at the cost basis for all the stock in which you own round lots of 100. Take a look at your cost basis. You can sell calls north of your cost basis and recover some of the loss, right? And you can take that and go out and buy more of the stock that you own, or you could buy something else that's on sale right now. So, yeah, Steve says NEO is $22.96. Holy crap, that's a steal. Let me be clear. Long term, it's a steal. They are a company that has yet to turn a profit. They are a company that has yet to demonstrate that they have a pathway to a profit. And just like the video that you saw on Xpeng that I did, they're going to have some production issues in the next couple of months. The stock is probably going to decline a little bit more once February numbers come out, because remember, Chinese New Year is coming up. There's no selling of vehicles during Chinese New Year. It's going to look really bad for Li Auto, for Xpeng, for NEO. It's just temporary. I expect they're going to see a bounce back. NEO Park, I forget when exactly that's going to come online, but that's going to be the next big shot in the arm for them in terms of production. So both William Li and He Jiaopeng have both said, though, that they are open to mergers to increase production and open to acquisitions. So I don't believe that either one of them is actually open to a merger, but not with each other, with other players. I don't believe that they're actually open to mergers. I think they're open to acquisitions, meaning they would go out and acquire. Now, the question is, do they have the cash to do that? If they don't have the cash to do that, how are they going to raise the cash to do that? So I think that both companies right now, and I looked at the balance sheets last week, or at least the ones reported last quarter, they have enough to weather these sort of production storms that are coming. They don't have enough to acquire. If either one of them were to announce a secondary offering, I would think that they are setting themselves up for acquisition. They're going to acquire another company. Actually, this reminds me. This is a big NEO news that I've stopped paying attention to all the other YouTubers that cover NEO because, you know, they're 10x this, 10x that, 100x this. But guys, this is pretty big news. Let's take a look at this here. So this is the first time I've actually used this screen sharing thing here. Let's take a look. NEO builds insurance brokerage subsidiary. Chinese NEV startup NEO recently set up a subsidiary working on insurance brokerage business, a move in response to China's launch of an NEV dedicated commercial insurance. So this is a big deal, of course, guys. I talked about this on another live stream where underground or unbeknownst to the average investor, Tesla's insurance business is eventually going to be a very boring but large percentage of the business that they do. And I think they're going to be able to do it better than any other company does because of the real-time data that they get from driving. They're going to be able to most efficiently price their insurance for the class of people that they're insuring, right? So we do this all on data right now in the insurance industry, mostly from accident records, police reports, and that sort of thing. We're going to be able to do this with real-time driving data from folks that are driving NEO cars, Xpeng cars, whatever's coming out. The data collection services for other vehicles is not quite as robust out there. It's definitely not like that with with VW's vehicles. They don't collect as much data, or as much data can be used to efficiently price insurance. Traditionally, the insurance companies out there, property and casualty insurance companies out there, they have a margin of roughly 5%, right? Which is not terribly exciting. I think that at worst, Tesla can do 20% better than that. They can have a margin of 6%. But you're looking at a business that could end up becoming a $50 billion, $60 billion a year business that is recurring revenue as well. It could be even more than that. We don't know. But so I think that's a very interesting thing that they could be doing here in the future. NIO is set up. They are working on this pathway as well, following in Tesla's footsteps. I fully expect that if Xpeng has not already done that, actually Chinese automakers like GAC Group, Geely Holding, SAIC Motor, and Xpeng have become players of the insurance business. Okay, so Tesla's also built its insurance brokerage subsidiary in Shanghai in August 2020. And Elon Musk said in 2020 that the insurance arm could be as big as 20 to 30% of the car company's business. This is, of course, far in the future. So that is one thing that I wanted to talk to you guys today that NIO is doing that's very, very exciting, and it could be a large portion of the business. Not exciting. I'm the only one that finds it exciting. So EV tools are focused on replacing taxis. By the way, there are a few models that are super quiet, Lilium and Joby. I'll believe it when I see it. And largely, I would need to be convinced of that. So open to be convinced, but I would need to be. What about the idea of an automated mass transportation of EV taxis, maybe short runs at the airport from specially designed depots? Actually, I think that's a better idea, specially designed depots, where kind of like park and ride right now. It's an idea that didn't really work in the US because, hey, you are using you're using buses. But what if you take like an Uber or an autonomous Tesla taxi to a station, unload your luggage, and then you take off on an EV toll and it takes you to an airport or something like that? I think that's perfectly reasonable and that could happen. How large is that market? How profitable is that market? That is my concern. So what are the chances the NASDAQ will go down another 10%? It's already 19.71% from its all-time high. So the chances are literally 15%. So there's about a 15% it's going to decline much further than it is now. And that is based on past performance of the stock market, which, of course, past performance is not indicative of future performance. But in the last 80 or 90 times that we've seen a market decline between 10 and 15%, in 85% of those times, it did not decline any further from that point. And even when it did, ask yourself this question: where are your investments? Are they in an IRA or are they in a regular brokerage account? If they're in a regular brokerage account where you're subject to capital gains tax, you almost certainly won't benefit. And I covered this a little bit in my live stream today, where one of the biggest YouTubers out there, Meet Kevin, supposedly sold out all of his portfolio. And I said it on the air, and I don't usually talk about other YouTubers, and I definitely don't want to insult anyone here. But honestly, I'm kind of a blunt guy. I don't think that he had a choice. I think he got margin called. I agreed with Tom Nash on this. It doesn't make any sense from a risk, tax, and time perspective that his story that he wants to sell out now and then reinvest by March 16th. Based on his tax bracket, the minimum he's going to pay in taxes is 18.8%, meaning he's in a higher tax bracket. He pays 15% capital gains plus a 3.8% additional Medicare tax on top of that. So he's got to make an additional 18.8% in order to make up for all the taxes that he paid in that time. I don't believe he's going to do that. Like, I wouldn't do that. I wouldn't do that if I knew stocks were coming back in a year and a half, right? I wouldn't sell out, pay all that money in taxes in the hopes that I'm going to make 15 or 18% over the next year and a half. I wouldn't do that. Taxes, once the government gets it, you ain't getting it back. So I think that he's not a dumb guy. I think he's very smart. I think that he just got caught out. He got a margin call, and they liquidated a lot because all he had was high risk stocks, right? Here we go. So yeah. So Epic Cancer says, I read this day that Tesla insurance was $1,000 cheaper than Progressive on models. So Insurance is highly, so I work for another insurance company where the auto insurance for them was cheaper than everyone. Other insurance companies would call up, I'd say who I was insured by, and they would just hang up the phone because they couldn't beat those rates. But it's highly location dependent. When I moved to California, California's market is a lot more competitive because of different rules. So the markets vary from state to state to state. Tesla Insurance is basically going to have 55, 56 different insurance companies for the different US states and territories. Eventually, that's what they're going to have. They're all going to operate under different rules. And each state is going to be a little bit more profitable, a little bit less profitable from the next one, right? So, the most profitable states for insurance companies are the ones where drivers have the least level options. So places like Florida, places all through the South is where insurance companies are most profitable. Auto insurance, based on excluding catastrophes, of course, like hurricanes and tornadoes. So when property and casualty comes to auto insurance, that's where the most successful. I do think that eventually Tesla's probably going to offer home insurance as well because they're doing these roof installs, these solar roof installs. It just makes sense that over time they would start to offer that insurance as well. So, so I do think it's going to, he said in this article, it could be as big as 30% or 40% of the car company's business. But he also said that Tesla Energy one day would produce more than the car company would. So I don't know if this is a misquote. I don't know if he was just, he had a little bit too much weed that day. I don't know. But yeah, those are some things that are out there. So if you guys don't know this website, by the way, and you can't see it up here, it's actually autonews.gasgoo.com. And it's one of the better sources of information out there for the Chinese auto industry. And we can look through a few things here that you might find surprising. Let's take a look at this right here. These are all the things you don't know about the Chinese electric vehicle market. What was the best-selling electric vehicle in China last month? It was not the Model 3. It was not anything that NIO made. It was this car, the Wuling Hongguang Mini EV. Last month, they sold 45,976 models of this vehicle. And let's see if they have a picture of it here. It looks like a box on wheels. It is tiny. It looks like a smart car, basically, but it's electric. It goes about 80 kilometers an hour. It has about 100 miles of range, but it actually works really well for the Chinese market. So they sold 45,976 units. That is a 32.3% year-on-year gain, and also jumped 19.7% month-on-month. Cumulatively for the year, they sold 390,474 of these units. The base price for this car is $5,500, $5,500. $5,500. The most expensive model for this vehicle is like $9,000. Actually, it says at the end of December 2021, cumulative registrations of the Hongguang Mini EV amounted to 506,071 units. That's 390,000. So they produced over 500,000 units of this car, and very few people outside of China have know who they are. And this is a city by city breakdown. So you can generally tell by the city that buys the most vehicles. That's usually where that vehicle company is located. These companies are highly competitive. They're highly regional. The market in China is more regionalized than most people realize, right? That's one of the reasons that no company has been able to dominate. People get proud of the vehicles produced in their region. So, if you don't know this website, it's one of the ones. It's one of the places where I get a lot of. One of the places I get a lot of information from. So Shanghai is one of the biggest cities in terms of producing what's called their new energy vehicles. The output leapt by 70%. Do you guys even know what this vehicle is? I don't know what this vehicle is. ROEW. I don't know what that is. But so they made 550,000 electric vehicle and hybrid vehicle units last year just in the city of Shanghai. That's over 70% gain. I think that's absolutely incredible. So the Chinese market is actually outselling the U.S. market in terms of electric vehicles by 2 to 1. What's the big danger in that? And this is one of the reasons why I want to see, and I don't get into politics here, but I want to see a certain piece of legislation passed because of how much is allocated to EVs. Now, I realize that leaves out our favorite EV company, Tesla, because they're not a union shop. But at this point, I realize that Elon's a little bit salty about this. But let's face it, we need to not give up the pole position in EVs to a Chinese company at this point. We don't. And it's not simply that Tesla is so far ahead now. They're so far ahead now, but remember Wright's law of manufacturing. The every cumulative doubling of manufacturing of something that you do, meaning the better you get at it, the more efficient you get at it, the cheaper you get at it. They may be making things at a scale that makes their margins much, much better than Tesla's, and they can offer a similar quality car as a Tesla at half the price here in the future. This is what we don't want to happen. We need to have much greater investment as a society, both in Europe and the US and other parts of the world in this, because we don't want to fall behind. And part of that investment is paying the price to do that. We have to lay out the money to do that. Anyway, that is my speech on politics for today. That's as far as I go. So here we go. Tesla ensures that we paid in Dogecoin. I guess it could be. So now would be a good time to start accepting cryptocurrencies for certain things. I mean, I guess cryptocurrency could go to zero in certain, a lot of cryptocurrencies are going to go to zero. Let's be honest. There are thousands of them out there. But when I'm looking at the biggest 10 that are out there, I don't think they're in danger of going to zero. They might decline a bit more. But honestly, I think they all have a pretty good future at this point, especially the ones that have the most developers developing on their network. So here we go. So hoping for good feedback on battery swap station locations. Being that a big travel holiday is coming in China, it was an issue last year. The network has more than doubled. So Hiker Dave 420, you're located in China then? You own a Neo or you use a Neo? I would love to hear from you personally. You can email me. You can usually find my link at the end of any of my videos or in the description. You can find my email address. I always want to talk to people who have experience driving Neos. I have a couple of friends in China who, one of them has an Xpeng, one of them has a Neo. One of them he bought something recently that I've never heard of. So Eric M says, I read a research report from a commodities hedge fund that solar, wind, and battery EVs have mostly gotten cheaper because commodities have gotten cheaper and not declining cost curves like Moore's law. That's ridiculous. That's incredibly incorrect. So I would love to see that report, but that's incredibly incorrect. That's one report. And trust me, I actually want to read it because the reports that I'm reading are stating that mostly it's mostly about volume production. Lithium has certainly not gotten cheaper over the years. Cobalt has definitely not gotten cheaper over the years. And nickel has not gotten cheaper over the years. Manganese has not gotten cheaper over the years. And these are the cathode materials. The anode materials, like graphite, and have not gotten cheaper. If we go to graphene anode materials, which I'm not sure is possible to do at scale, or even possible at all, actually, that would certainly increase the cost of batteries. But no, that's something that I wouldn't believe until I saw the evidence laid out in front of me. And that's the kind of person that I am. I generally don't believe anything that I hear until I see the evidence for myself laid out in front of me. Of course, like everyone, I make certain assumptions that can be wrong. So if you want to educate me, my email address is located at the end of almost all of my videos. There you go. So are you currently in favor of Xpeng or Neo and one of the seed in the long term? So here's the thing. Put it this way. What company, so in terms of cell phones, are there more iPhones out there or are there more Android phones out there? Android dominates the market, but no single player in Android dominates the market. Xiaomi, Huawei, and a couple of other manufacturers are actually the largest producers of cell phones in the entire world. They're all Android phones, right? But Apple has this giant advantage in branding. They can sell anything and people will wait outside for hours to buy it, for hours and hours and hours to buy it. It may be, Neo is just a very catchy name. Neo has created a very strong brand. I do worry that they've created separate class. They're going to create separate classes of customers with the ET5 or any other down market vehicle. Are they really going to allow the unwashed masses to access the Neo house, which is really developed into a meeting place of high net worth people, right? And also childcare. They offer free childcare if you're a Neo member. You're a stay-at-home mom or whatever. You can drop the kids off there for a couple hours, go shopping, come back, pick up your kids, and someone's been watching them, right? I know that's not something that gets a ton of press, but of the one Neo person that I know that owns it, his wife absolutely loves the free childcare. Are they really gonna? And they paid, I think, close to $80,000 for their original vehicle. When it was all said and done, they paid almost $80,000 for it. There's some early buyers and early investors. Now, when they're already moving down market with the ET5, I don't remember exactly what the price was. It's still pretty pricey, but it's a big difference between $80,000 and what they're paying. Are they still going to feel like they're getting the same value when they're selling a $35,000 car and that same person who bought that has all access to all the features of the Neo house? If they create a tiered structure, do they create a class issue with the company? That's another concern. So I have all of these concerns with Neo. Yeah. So hold on a second. Sheila's Joe says, I'm gonna get to your question in just a second. In terms of Xpeng, the reason I like Xpeng is they're just better at manufacturing. They own their entire process. Their research and development is a bit more wide ranging. And one thing that concerns me about Xpeng is I can't prove. I'm sure they're doing this, but I can't prove that they're managing their supply chain when it comes to acquiring batteries as well as other manufacturers are, like Tesla. Like Tesla actually owns, lithium, lithium properties, nickel properties, all these. They're doing all these investments in the different cathode materials that they're going to need going into the future. Let me see here. What are our feelings on Invitae currently at 1013? Thanks for telling me that it's at 1013. I'm going to go buy some tomorrow. Okay. Those are my feelings. I think that basically in the future, I think that this is going to be worth a lot of money. I think the ride is going to be really, really bumpy for Genomics, but I'm looking at a 10 or 20 year time horizon for my Genomics stocks. I've slowly been, when I say Genomics stocks, I own ARCG, and I've slowly been building a position in that over the years. I don't know if you guys ever saw my videos on me finding my birth parents and the genetic issues that I investigated with that. And I never even told you guys the whole story about solving my biological grandmother's murder using nothing but 23andMe, Ancestry, and newspaper articles, and I basically solved her murder. Never told that on the air. One of these days I will. It's actually fascinating. But it actually solved a paternity mystery that involved my grandfather, and this would be in 1907. So I solved a paternity mystery from 1907. But anyway, so I'm supremely interested in genetics for a very, very long time. And this goes all the way back to my university days, and when I first started studying genetics. But I don't have the confidence to go out there and pick technologies in the field of genomics and say that this is going to be a winning technology. I think this is one of the industries where it's really going to pay off to have either a really, really wide portfolio of genomic stocks or just buy an ETF or a mutual fund focused on that. I think you're going to have far better success. Is Invitae eventually going to be the Tesla of the genomics field? I don't know. And I don't remember how Kathy Wood sort of described it, but I didn't buy it then necessarily, and I don't buy it now. The companies, so here's the thing that's not well understood, is that 23andMe's product is not their genetic test, right? They sell you a genetic test, you pay $100 for ancestry, you pay $200 for health. That is not their product. Their product is actually you. It's your DNA. It's all of the data that they're collecting, and you sign off on that when you agree to be tested. And they're selling that to other companies so they can gain insights about all of the genes that they're identifying. And they collect your entire genome, not just the the 0.1% of you that makes you unique, but they're collecting all of the genome that, of course, makes you human, and the exome as well. If you don't know about the exome, that's a very, very important part of our genetics as well. You should know something about that. But that is 23andMe's product. That is Ancestry's products. And that is where they're eventually going to make the majority of their money. It's not going to be from selling you tests that check your ancestry. So yeah, want to remind you guys again that I do have the super chat features on if you feel so inclined. Let me see here. What do you think about internet provider stocks like Comcast and AT&T? I think they're really boring, Fred. So part of it is they're so heavily regulated right now that it's difficult for them to make like outsized profits. I do think that they're solid performers at this point. They're going to be solid dividend players, but AT&T actually dropped off of the list of dividend aristocrats this year. This is the first year, 2021, where they did not increase their dividend. First time they've done it, I think, in like 40 years or something like that. So it's been a very, very long time that they've been increasing their dividend every year, and they stopped doing that. But they're so heavily regulated at this point that their profit potential is limited, but their potential to go out of business is pretty limited as well. So Brian Lee says, SoFi got the bank charter, but the stock is not moving a lot. Disappointed. I'm disappointed too. But look, this is a company that's going down despite its fundamentals, not necessarily because of its fundamentals. I'm happy to own SoFi at $20, even though it's at $12 now, even though I'm sitting at a loss in the stock. I think my overall acquisition cost is something like $17.60 now or something. I bought a few more shares when I shouldn't have, and now I'm somewhere north of like 6,000 shares. So I'm disappointed by that. But look, it's general market conditions. All fintechs have been under pressure for quite some time. SoFi has a few headwinds at this point, but the future of this company looks extremely, extremely bright. The future of almost all of these fintechs look extremely bright because of the extremely low satisfaction rate that most people have with the bank where they're doing business. Estimates are there almost a half a trillion accounts that are going to be in motion over the next 5 to 10 years. And it doesn't take you winning them all to be immediate or to be enormously successful as a company. So I think we're going to see that they've had good member growth over the years. They sell a good suite of products. They create a good community. I actually used their financial advisory service, their certified financial planner. I just wanted the second opinion on what I was doing. It was really interesting. I didn't expect much. I'll be honest with you. I've been doing this for a long time. I'm a professional. I didn't expect much. And the gentleman that I spoke to actually gave me some insights that I wasn't thinking about. So they have a good training program. And I asked him really pointed questions about this. I didn't tell him I was a CFP myself, but I asked him really pointed questions, and he credited it all to his training. So, oh no, looks like the Russian bots have found me. So I don't know what these things mean, guys. Sorry. Is Target a buy at this price? I don't know what the price of Target is. Target is a company that I own only through ETS. And it's not because I don't necessarily like Target. I don't think there's a way for me to gain an advantage over institutional traders because there's so much public information about this and their business is so predictable, right? So there's plenty of stocks like that where I'm like, hey man, I'm not going to buy it as an individual because I already own it through VTI or I own it through an S&P 500 fund or something. I probably own it one way or another. And I'm not going to buy that just because there's no advantage to be sought because all information is public. Everyone's reacting from the same thing. And, and the market is really you can't get an advantage over a larger player. So, yeah. Brian Lee says, agreed. I have a lot of confidence in SoFi. I think it'll move up in March when the Fed unfreezes student loans. I think it will too. But I think the Fed has to unfreeze student loans at some point, and that's going to improve their bottom line. But let's remember that their technology platform, Galileo, has been adding users left and right. They've been adding customers through personal loans left and right as well. Their mortgage operations are taking off. But Galileo underground is, or, what people aren't considering is probably that they are going to be providing 30% of the revenue for SoFi in the next few years. That a lot of people are going to want to tie in to SoFi's ecosystem, and they already have a number of pretty decent sized clients. So I think we're going to see, and I'm actually really excited to see that. But banking operations, that's going to start immediately, but I don't think you're going to see real impact on the balance sheet and operations and probably until beginning of 2023. That's when I think that's going to happen. So Chime is growing faster than SoFi. Does SoFi have any competitive advantage over Chime? I haven't not looked into Chime at all. I'll say that. So I haven't looked into that at all. So one of the reasons that I like SoFi over some of the other fintech players is the market that they're targeting, right? So when their target market is folks who make $100,000 or more, millennials essentially, and people over 30 who make $100,000 or more, who are these young high earners with a little bit of student debt, are not well served by the current financial system. And we know these are going to be the folks that acquire wealth in the future. And these larger institutions, they want to do business today with the clients that they have and people who already have money. They're not willing to build relationships with clients where they're high income, but they're not necessarily high net worth yet, or high wealth yet. And so you're looking at high income or high net worth folks that are not well served, and that is their target market. So these are higher quality relationships. Like, every person who works in wealth management in the bank knows that you make 80% of your revenue off of the top 20% of your clients. And really, the other 80% of your clients are kind of a waste of your time. What they're trying to do is cut out the waste of time and just go with those clients that are high value relationships, where you're going to get origination fees on loans because they can afford to buy a home. You can buy all kinds of things. So, or they can afford all kinds of things. So this is one of the reasons I like SoFi. And I have not looked into Chime. I don't know what kind of market they're targeting. So, So Xing Liu says, and I hope I'm pronouncing your name right, Xing Liu says, I just added Roblox. Do you think it can go even lower than it is? I caught the falling knife at 95 and added more as it dropped. Hey, man, I caught the falling knife at 93. I did it a while ago, though. So, look, I'm fully confident that years from now, we're going to be happy owning it at 95. You're going to be happy owning it at 140, where it was a few weeks ago. This is going to take a few years, but you'll be happy owning that. This is a company that's growing and growing and growing. Their platform is becoming more popular. They paid out about $250 million last year to developers. It looks like they paid out about $500 million in 2021, and they're looking at, I think their guidance for this year is probably going to end up being another 50% growth. So they had about 100% growth last year, probably 50% growth this year. 50% growth is fine. You don't have an infinite growth potential when it comes to users, and they're going to find more and more ways to monetize the content that they have. So the quality of their games is getting better and better too. So very, very happy looking at Roblox, especially with all this attention on the Metaverse. The Metaverse video at this point is at this point my most popular video that's out there. But I do think that the most juicy aspects of that Metaverse are sometime away, folks, right? I like Unity stock as well. That's another stock I like long term, for far more than simply the Metaverse. They have one of the easier platforms to work on. And I wish I know that Tencent owns like 40% of Epic Games, which that's the Unreal Engine. That's the engine that Fortnite was built on. I wish there was a way to invest in that directly rather than having to own Tencent. I don't want to own so the large conglomerates in China are under pressure right now, and I think rightly so, because they've all tried to create their own universes where you're segregated from the rest of the internet, segregated from the rest of the technology world. And I think that some of those companies are going to be forced to divest some of their interests over the next couple of years. So I think that, I think that in the two platforms I'd like to invest in right now, that are video game related today that are going to be metaverse related in the future, and that's Roblox and that's Unity. Everyone wants to talk about platforms or Facebook. I'm not sure that they can pivot and really make it. I'm just not sure. But I think that Unity has a great future in particular. I own a little bit more Roblox, but I think Unity has a better future. Surprisingly, though, the options market for Unity is really thin, meaning that if you go out 3 months, there's no more options that you can sell out there other than the monthlies. So yeah, very curious that there hasn't been a really robust options market developed on Unity like there has on Roblox, which is a little bit troubling, to be honest with you. But I want to see what their fourth quarter numbers look like in terms of Roblox. But these are longer term investments for me. Like, I'll feel vindicated in my investment maybe 5 years from now. Like, I'm looking at Genomics, meaning 10 years from now is probably when I'll feel good about it, and I'll start thinking about selling. 5 years from now, I'll start thinking about repositioning because 5 years from now, I think that Roblox and Unity will be so large a portion of my net worth that it just makes sense for me to reposition some of those monies in something else, because the risk has gotten too large because they've grown so much, right? How to do this with Tesla over the years, how to do this with NEO, how to do this with a company that you never heard of called Asta Funding, which was a great investment story. They're completely out of business now. And how to do this with Hanson Natural Products, which is now Monster Energy, where they grew to be so large a portion of my net worth, I had to trim that back and do something else. So so if you could pick only one, SoFi or Stripe, that is a big issue. If you only pick one, SoFi or Stripe. So SoFi has more avenues for revenue. Stripe, though, has a giant advantage over everyone else. They have the easiest to integrate financial services platform probably on the planet, right? So I was way back in the day before I got into finance. I was actually, as a financial professional, I was actually a programmer and database analyst in the financial world, and hooking up early websites to the financial world was a freaking nightmare. Stripe has made it easy. It's 7 lines of code. Anyone. So the deal with programmers is for every 100 programmers out there, 10 of them are good. 1 of them is spectacular. And the rest are mediocre or bad, right? About 10% of them are bad, and the rest are mediocre. And with mediocre ones might as well be bad because you can't depend on them to do anything spectacular, right? Stripe has made it to where anybody can integrate financial services now. That's one of the things they've done is they made their platform so incredibly simple to use. I do think, honestly, that Stripe may actually be a better performer in the short term than SoFi will, because SoFi's short-term performance hasn't been great. In the long term, though, when it comes to like staying power, I think that SoFi may actually end up being better. So I think something will come along to replace Stripe at some point that's even simpler and easier and more robust to use. And typically, it's not the same company that invented that first easy-to-use technology that invents the second one too. Any thoughts on TTD and Marvel Technologies? I'm actually curious to see why Marvel keeps coming up over and over and over. Let me see here. I'm going to pull something up. Trade desk. Let's look at Marvel Technologies. And here I'm going to share my screen again, guys. Here we go. Oops, no, 10-year. Yeah, I need to take a closer look at this. Marvel's come up a couple of times in the last couple of calls, or last couple of presentations that I've done. I should probably take a look at that from total revenues and compound annual growth. 35% compound annual growth in revenues over the last year. 23% the year before that, 23. But you had negative growth in 2020. Oh, well, that's in 2020. Okay. Yeah, let's take a look at that at some point. do a little bit deeper dive into that. That's something that I haven't covered in a very, very long time. Covered it. I looked at this company a lot before I even had a YouTube channel. So I haven't thought about this company in a while since being disappointed and losing money on this company in the 2016, 2017 timeframe. So, yeah. So what are Microsoft's chances of getting away with the Activision deal without antitrust issues? Well, there's going to be some antitrust issues. Ultimately, I think they're actually going to get away with it, though. That's just what I think they're going to do. And I think that they have looked at what NVIDIA went through with the ARM acquisition. They looked at a couple of other companies. And honestly, I don't think it creates a trust type situation. There are lots of other video game manufacturers out there. Lots of other projects in the metaverse and well-funded projects in the metaverse. And remember, the biggest competitor in their foray in the metaverse is going to be actually Meta Platforms, Facebook. So I don't think there's a trust issue created yet. And then Epic Answer says, speaking of the metaverse, any thoughts on Decentraland and Mana? So I have a whole video script that I wrote on Mana and never put it out. Because I have a whole script on Decentraland that I wrote and never put it out. I thought Decentraland was fascinating from a real nerdy perspective when it came out, a decentralized metaverse. But then, I look back at the sort of Facebook versus MySpace wars and realize that centralized control is the reason that Facebook survived and MySpace didn't, right? And I do think that any sort of decentralized metaverse is going to have issue after issue after issue. I think number one, it's going to have all kinds of adult type issues relatively soon. I think it's going to be a center of conflict. I think it's going to be invaded by the 4chan or 8chan folks, all those people. And I think that's coming very, very soon. And very soon. In terms of they created the idea, though, of digital real estate being sold. Not that digital real estate wasn't sold already. It certainly was. Like back in 1999, you couldn't buy an advertisement on Amazon's homepage for less than $50,000 for 100,000 impressions, right? So that was like in 1999. Now they do things completely differently. You don't buy things per impression on their homepage. You do things completely differently. But digital real estate is actually something that's nothing new. It's just they found a new way of doing that. In terms of their cryptocurrency, I'm not really looking at any of the tokens that trade on any of like the major blockchains right now. That's just an Ethereum token. I'd much rather just own Ethereum at this point. So although I don't like owning any of them right now, I think my crypto portfolio is probably down by like 50% in the last couple of months. I'm trying not to look at it. It's that's the deal with crypto. It's any of them can fail at this point. I don't know what's going to happen, what's going to be successful. And I want to own a wide variety of the leading players out there. And I'm talking Solana, Algorand, Bitcoin, Ethereum, and a couple of others that I just can't think of off the top of my head right now because I'm in a couple of beers now. Hamdan Ahmadi says, what do you think about, and I hope I'm pronouncing your name right, Hamdan Ahmadi, what do you think about NEO stocks as a long-term investment? I bought it in the 40s. So I've owned NEO stocks, my first batch since I think either November or December 2019, bought a much larger batch in like February, March of, 2018, sorry. And then 2019 is when I bought my largest batch. So I'm already a longer term investor. I do think that this company definitely has a future. If you bought it at 40, I think that 5 years from now, you're still going to be pretty happy that you bought it at 40. And what are your thoughts on Salesforce, not as a stock, but as a company and growth in the openings? So I've used Salesforce for years, and I've used the competitors. HubSpot is probably the biggest competitor. I think that both HubSpot and Salesforce have great growth potential. They are deeply involved in AI. They're deeply involved in data analytics at this point. And both products are actually really good at what they do, which is manage customer relations and actual Salesforce, right? Yeah, I really, really like both of those companies. They're not terribly exciting, but I do think they're both big growth plays over the next couple of years. I really do. So very happy. Divish Patel, $5 super sticker. I wanted to thank you so much. I don't do these for the super stickers, but I certainly appreciate the super stickers and the super chats. Epic Cancer says, I love Marble, big 5G play. Kramer loves it too. Yeah, I can understand why. I should probably take a second or third look at this. So Hamdad Ahmadi says, did you invest in BYD? Have yes, tell me things. So I was kind of one of the early YouTubers that really started covering BYD heavily. I didn't have the money at the time to invest, and I think I invested maybe last year about the April timeframe. So I got it at a high price. I don't remember exactly what that is, but I'm investing in this for the long term. I expected BYD's battery technology to be a little bit more of the forward leader in terms of revenue. That is not what has happened. What has happened is they've become one of the largest producers of electric vehicles in China. They are just behind Wulong Mini EV and Tesla in terms of volume. And they had a 70% gain in production year over year. They know how to manufacture. This is a company of 250,000 people. I've seen their internal combustion engine vehicles, and the quality is not great. The quality of their electric vehicles is a lot better. And I've talked to a couple of engineers who actually work with VW, who tore a BYD vehicle apart. And other than some metallurgical issues with the actual steel used in construction, it's a fine vehicle. Now, it is certainly one, and I'm talking about the BYD Han. The BYD Han, which is their best-selling electric vehicle right now, is one that is focused more on comfort rather than performance, but it's still a stellar performer compared to any vehicle that I've ever owned. But in terms of their delivery of vehicles across the spectrum, in a lot of ways, man, they are catching up to Tesla. And they're making electric SUVs. They're making electric taxis. They're making. You heard of the BYD Dolphin, of course. This is a vehicle that's going to power a taxi fleet where your entry price for that vehicle is $15,000 as of a range of about 220 miles on a single charge. Yeah, I'm a huge fan of BYD. I think that if they can manage their own supply issues when it comes to the Blade battery. So the Blade battery is a lithium iron phosphate cathode chemistry. There's nothing in there that's rare. There's nothing in there that is not recyclable. And there's nothing in there that's expensive. So you're looking at a very cheap battery that's about 14% less efficient from the most efficient batteries we have today. That's going to be cheap to make. It's extremely safe. It dissipates heat a lot better than anything that's out there. I think that they are going to start selling this battery to other EV companies who want to use it. There was a rumor going around that the Blade was going to be powering some Tesla vehicles. That rumor was never substantiated, so I would say dismiss it for now. But I would not be surprised at all if BYD licenses their technology, their Blade battery technology, to another electric vehicle company. So, yeah. What are the chances of the coming Fed coin becoming mainstream? Well, I think it'll become mainstream almost instantly. It is actually a Fed coin. Now, does it displace Bitcoin? Does it displace cryptocurrency? I don't think that it is. A central bank digital currency is not a cryptocurrency. It may operate on its own blockchain, but I can say one thing: it is not decentralized. So when you're looking at the trilemma of cryptocurrency, which is security, decentralization, and crap, I've had too much to drink. I can't remember the third leg. So the one thing you don't have is decentralization with the cryptocurrency, which is something that you definitely want. So I don't think it's going to completely replace cryptocurrency. I don't know why. I mean, I understand why central banks want to create their own digital currency. I don't see why they're fighting so hard against cryptocurrency. Cryptocurrency is always something that I envision operating in parallel with regular currencies. I didn't see them operating in place of regular currencies. So Lil Slam, thank you so much for your super chat here. Being super speculative with everything falling, where would you go to look for multiple returns in the next 5 to 10 years? So still in technology stocks, like you don't have to necessarily be in love with Cathie Wood to understand her thesis of disruptive technology and to understand that we are going through a time period of rapid change, and that change is only going to accelerate in the next 5 to 10 years. So look at her 5 platforms of technological change, of innovation, her 5 platforms of disruption there. You could pick any one of those, and if you had broad enough exposure, I think you're going to have multiple returns in the next 5 to 10 years. If you're on the 10-year time frame, I think that Genomics is a great investment. If you don't like Cathie Wood, there are a number of other funds that focus on genomics now. But in terms of the electrification of transportation at this point, you're not too late to get into Tesla, but they're going to be bigger. They're going to be faster growers in the future outside of Tesla. But the number one, hands down, place you should be investing, other than NVIDIA, of course, is actually the lithium battery supply chain. I don't care who wins in electric vehicles. Lithium is abundant. It's widespread. It's just doesn't occur in its natural elemental form because it's highly reactive. Just like the other elements that we could be making batteries. We could be making potassium ion batteries. We already are making sodium ion batteries. We could be doing all of that, right? And we probably will. Like sodium ion batteries are probably going to be made for less energy intensive things like cell phones and watch batteries and stuff now. We probably won't be using lithium in those for much longer. It's going to be sodium ion batteries. But looking towards the future, though, investing in the battery supply chain, I think, is going to be one of the best ways to make money. Like Albemarle is a good bet for that because they're so far ahead in terms of owning that lithium supply chain. I recently started buying LIT, which is an ETF focused on that lithium supply chain. I think that that's probably a better way to go. The big players in lithium are actually really huge now. But there are going to be thousands of smaller companies that pop up over the years. Of course, some of those are going to 100x. A lot of those are going to fail. I think that it's probably a safer bet to buy that in an ETF, right? To focus on that sector and buy that in an ETF. So that's sort of outside of the 5 platforms there, but it's kind of like, like you said, it's kind of shooting down shooting into like a specific sector and looking at that. So the battery supply chain. So there's an ETF called BATT. There's another one called LIT Lit. I'm sure there's others out there now, but take a look at those if you want something that's probably going to give you multiple returns over the next 5 to 10 years. Take a look at the stocks inside of those ETFs if you don't want to own an ETF. I know a lot of people don't because they think they can't make money. I think that right now there's a lot of new investors who've only been investing for the last 3 or 4 years. They've only had good times. You haven't seen how diversification really works. And I had this conversation with someone this summer where they were talking. He immediately got into politics, which normally I don't mind discussing politics and in person. I don't want to do it on the internet though. And he immediately said, "Hey, I've been losing money ever since this person was elected." And this was in like July. And my first thought was, if you've been losing money since January 20th, then the fault is that you are not sufficiently diversified, because it's been very hard to lose money between January 17th and July 20th. Whenever I talked to this guy, it would have been very, very hard to lose money in that time period. And then when I started talking to him and he's an older guy, he's like close to 40, kids, but he just started making good money a few years ago, just started buying stocks, really during the in 2020. And he just kind of doesn't understand diversification beyond what it means as a word, and how correlation and diversification, time in market actually work, to where your return, if you get 11% return in your overall portfolio over a 30-year time period, you are a rock star, my friend. But yet we've all been spoiled. I mean, I've made 100% in my portfolio over the last 2.5 years. That is ridiculous, and that will probably never occur again in my entire life, right? And that's something I can't expect ever again. Your expectations of what you should make in the stock market are a reflection of your risk tolerance, how much risk you're willing to take. And some people don't even understand how much risk they're willing to take. But that is how much return you're going to make over time. But there's a large degree of volatility in that return as well. You have to take a lot of risk to make a lot of money, which means you have to be willing to accept that you will lose all of your money, and that risk doesn't pay off sometimes. So, BYD also has school buses, transit buses, and trucks too. Yeah, that's one of the things I want to talk about. One of the big factors is here in California. And they're actually having some regulatory problems in California. I don't know if they're actually a dirty factory or if it's just California being California. But they're probably going to diversify their manufacturing base outside of California pretty soon. And you're going to see that more and more with other companies too. I know that VW has plans for EV manufacturing in the U.S. I know that Mercedes has plans for EV manufacturing in the U.S. South Carolina is probably going to be a big beneficiary of for VW, and I think Texas is going to be a beneficiary not just from Tesla but from a couple of other places here. So, yeah, MP Material covered it a couple of times. I want to be a little bit cautious about what I say about MP Material. I've been thinking about doing a video on them for a while as well. So, any water stocks or ETFs you could recommend? I haven't looked at water stocks in a while. I will say one thing. Back in 2008, one of the firms that I worked for created this report basically stating that there's going to be this massive, this is 2006. So it was before the 2008 crisis. There was going to be this massive wave of infrastructure investment in water because of how old water infrastructure was in the United States, especially across like smaller cities, how it needed to be updated. It can't keep up with demand. And there's going to be this massive wave of investment in there. That, of course, didn't happen because of a series of financial crises. And now we're 13 years down the road, and that still hasn't happened. I still believe that wave of infrastructure investment for water is happening. But I don't necessarily have any recommendations. I had a bunch, but they're all 13 years out of date. So sorry about that. What are your thoughts on battery recycling company ABML? They just started building a factory. They have mining rights to 16,000 square miles located near a Tesla factory. So this is my worry with them. And is this the company that's actually run by one of the former founders of Tesla, ABML? I can't remember. This is one of my worries with battery manufacturing companies, kind of depending on Tesla, is that battery recycling rather. I think that battery recycling is actually going to be a very lucrative business here in the future. And I think that we'll get to a point where we actually don't need to pull that much more lithium out of the ground every year because so much of lithium batteries are actually recyclable, right? And we'll be able to, there'll be so much in circulation coming out of vehicles. And here's the thing, especially with like a lithium iron phosphate battery that can cycle anywhere from 4,000 to 5,000 cycles before it goes down to 70% capacity. That battery life is like 20 friggin' years in a EV and probably another 20 years in stationary storage with lower energy requirements, like for like grid storage or something like that. So we're a long way away from needing like a massive industry of battery recycling. I think that's going to happen one day, but it may be a little bit further away than you think, especially if we start reusing these batteries for stationary storage. But even if we do, I think that Tesla's going to get into the recycling business. I think that is 100% in their plans today. It's just 10 years down the road. I think there's a lot of companies that are going to get into battery recycling. I think more of them are going to get into it when the price of lithium spikes, not realizing that eventually there's going to be so many batteries in circulation that the price of lithium is going to come down because it's going to be no longer mined from the ground. It's going to be recovered from spent batteries. So I think that this is going to be really, really hard to pick which company is going to be the winners and which are going to be the losers. And I think that we're not really going to know or have a good idea of what this market looks like until 10 or 15 years down the road when some of these newer batteries start to go bad. You're looking at some Teslas that are 12 years old that are still using their original batteries with 300,000 miles on them. Some of them are 400,000 miles. That's longer than the lifetime of many cars. So batteries are already lasting longer than cars themselves are in a lot of cases. So yeah, I've thought about this and I thought about this and I thought about this. And I just think that ABML's path to profitability is a long way off, a really, really long way off. And they should probably start with recycling cell phone batteries or something like that instead of car batteries. I don't know if that's what they're doing or not, but that's what I think. So is Xpeng still overvalued? Where can you see the stock in 2 months? Well, I'm not going to make a prediction of where the stock would be in 2 months. As far as Xpeng overvalued, remember that every stock that is not making a profit is overvalued, right? But when I look at valuing this company based on what their potential profit or their profit potential is 5 years from now, I would say that the company is not necessarily overvalued, that it's pretty close to where I'd like to buy more. I do think, though, that Xpeng is probably going to decline. After they report February numbers, it's probably going to decline in the low 30s. I want to pick up more and more shares. I think it's going to have a tough year, actually. I think Xpeng is going to have a tough year between now and when their next factory comes online sometime in Q4 of 2022, Q4 of this year. I think they're not going to be able to increase their production at greater than, say, 20 to 21,000 units. I think they can't make any more than that. They made 16,000 units in December. They're probably going to have the same amount in January. If they don't have serious supply issues, they're going to get crushed in February. The stock price is going to decline because of Chinese New Year. It's going to bounce back possibly in March at that point, but it may not be higher, or it's going to be incrementally higher from that point. They can't make too many more improvements until that third factory comes online and their fourth factory comes online sometime in 2023. So it's just a matter of it's like Netscape, really poor, or not Netscape. It's like Netflix, really poor timing. They won't be able to expand their production. So other companies like Hosan, like this Wuling Mini, like BYD, they're going to look like they're stealing market share. They're going to look like they're making better progress, when the reality is that for EVs in China, the market is essentially unlimited. Just like it is here, or demand is unlimited for vehicles. Demand is basically unlimited for Tesla here in the United States, even though 50% of all EV sales in the United States are actually done in California. The rest of the country is starting to catch up in terms of EV sales. So I think that's very, very important. So yeah. So Ford is far better than NIO or Xpeng. I don't know. I don't think they're going to crash and burn like I thought they were 2 years ago. I want to see it. They know how to manufacture. Right? And they know how to manufacture something with panels that fit and finish. They know how to do that better than Tesla does. But do they know how to create a modern vehicle that customers really want? That's an electric vehicle like Tesla does. That remains to be seen. What they produce with the Lightning, it's a truck. I mean, it's electric, but it's still a truck, right? And it's a great vehicle from what I've heard. I haven't seen one. I haven't been in one or anything like that. So, yeah. Do you think that ChargePoint has a chance in the EV market as a charger? I mean, how will they make a product of EV charger spots? So I don't think that every company is going to have charger spots in the future. I think that ChargePoint's going to do really, they're going to do okay. The problem with ChargePoint is it's just a plug, and that's what people don't realize. It's just a plug. Every electrical component manufacturer on the planet is going to get into making chargers here as this expands. Hamadi, you don't have to apologize for your English, so don't worry about that. You probably speak English better than many people in the United States. So, but no. So I came out early I think last January or February, I did a video where I'm like, look, man, I'm not convinced by ChargePoint, right? And that was my main thesis, was that ChargePoint has the issue that they just aren't special. It's a plug. And like literally, you don't even really need a charger. You can plug it into your. For some of these cars have attachments where you can just plug it into the same socket that you plug your dryer into at home. And the fact that it's just the infrastructure already exists. There are thousands of electrical component manufacturers out there, and they can all do this. So can they do okay? I think they can do just fine. Are they going to be the next Tesla? Are they going to be the Tesla of charging? I don't think there's any way in hell that's going to happen. So I think that market is going to be really, really fractured, and that somebody's going to emerge as sort of the great acquisition company that goes out and starts acquiring all these companies left and right, and that's going to be the winner. I don't think that's going to be ChargePoint. So TDFC and QCOM, both great investments. I think they're both great investments. So I foresee a Chinese VW equivalent acquiring the likes of NIO, Li, and Xpeng. So here's the problem with that. So these guys still have control of a lot of votes. And when I say these guys, I mean, I can't remember who's the CEO of Li Auto, but He Xiaopeng and William Li, they're part of a newer, more individualistic class of entrepreneur. They have enormous egos, and they're narrowly focused companies as well. I know it doesn't seem like that, but they're not like Alibaba that owns a million different companies in a million different industries. They're not like Tencent, the same thing, a million different companies, a million different industries. They're pretty narrowly focused on things that are related to EVs, and they have their own vision. I think their egos are actually going to get in the way of acquisition, unless it's something like a hostile takeover, which I don't think they really allow hostile takeovers in China unless it's initiated by the Chinese government itself. So, Nikhil, so the only reason I asked him is XL was catching up to NIO market cap. I think it's almost the same now. Yeah, I think it is the same now. I think that Xpeng is actually a superior company to NIO in terms of its manufacturing capabilities, in terms of the size of the addressable market that they're looking at. I do think, though, that NIO has a pretty big edge in branding, and that's something that I always underestimate. So, Talon Metals stock going up, Tesla partner. What do you think? Is that verified that they're a Tesla partner, or is that still somebody else brought this up? I don't remember what it was, but somebody else brought up Talon Metals. Is it verified that they're actually a Tesla partner? So that's what I'd want to know. Epic Cancer said Netscape again. We're old. Yes, I remember Netscape. Is there a company you see having the Tesla effect? What do you mean by the Tesla effect? Tesla single-handedly created the electric vehicle industry. Single friggin' handedly. Not without the aid, of course, of billionaire packages who, to rescue them, and government grants and government loans that came at opportune times when they were about to fail. But it's really, Tesla's been a very successful public and private partnership. They've gotten, Elon Musk between SpaceX and Tesla has gotten almost $4.9 billion in subsidies from the U.S. or from U.S. government in California. And I'm not talking about the tax credit that you get when you buy. These are direct injections of money into the company. So it's very successful. We need to go further than that. China is developing these massive technology parks to discover new things, and we aren't doing that. We should be doing that. We shouldn't be copying what they're doing. We should be doing something better, Yeah. So let me see here. You guys keep asking questions. I'm going to pull up another one of my programs here. Check on progress. Says, yeah, I think Xpeng like NIO. I do too. But the Xpeng, so if you go to the northern part of China and you talked about Xpeng, people probably wouldn't know what you're talking about. If you go to the southern part of China, like the Pearl River Valley, Shenzhen, all that, it's very popular there. Lots of people know about it, and it's got this sort of this cachet with younger tech savvy people. Everyone knows about NIO though, and that's the advantage I think that they have, even though they're hamstrung by their relationship with JEC Motors. I do think that they have a pretty big branding advantage and knowledge advantage. Although when you talk about the popularity of NIO, popularity of Xpeng, in a lot of ways, it's really in the minds of people that consume Western media. Lee, Xpeng, and NIO are in no way the leading are in no way leading the EV revolution in China. It's BYD, it's Tesla, and a couple of other companies that you probably haven't heard of. Hosan Motors, I think they delivered 9,000 vehicles in December. Who knows what they're going to. You ever heard of Hosan Motors? Did you ever heard of Wuling Mini, the company that I covered earlier? So yeah, a lot of things going on in the Chinese EV market that we aren't necessarily exposed to. And it's not like a conspiracy or anything. It's this is just because these companies are the ones that are traded on markets here. These are the ones that we hear about, and this is the media that we consume. It's not a conspiracy. It's just the way things are. But yeah, I think that yeah. Okay, guys, it is getting time where I need to start cooking dinner for my kids. So my wife is out sick today. I think she wants me to make ravioli some of the kids. And of course, I'm not going to do that canned ravioli stuff. So let me see here. All right. So Pat Mulligan, will NIO Park be a game changer for NIO? I think it will. So let's remember, I hope NIO Park is a game changer, right? But I think initial production capacity for NIO Park is only 100,000, and it's going to take a while to ramp up to that, right? But yeah, so I hope it is too, but because I have a lot of NIO shares. Anyway, guys, thank you so much for tonight. I've had a little bit too much to drink, and now it's time for me to get off this live cast before I start saying things that are really dumb. And I want to thank you guys for showing up, and I want to thank you guys for super chat this time. I got a lot of super chats, more than I normally get. So thank you so much, guys. And Doug B says, I like canned ravioli. I'm sorry. So Doug, I'll see you guys later. You guys have a nice, or you folks have a nice evening.